Dropbox has been in the news lately with a big mix of kind of good and bad news. But at the same time, you take a look at the HyperCharts and you see the net income has like plummeted. What is the deal with Dropbox? What's going on? Today, we're going to take a look at Dropbox. We've been following Dropbox on this channel for a long time now. I've done numerous videos on it as well. My most recent video, I said, hey, these new features, including Dropbox Spaces 2.0, will probably make Dropbox a really good, kind of scrumptious looking treat for another company to pick them up. Click up here if you want to check that out. I've also been looking at Dropbox Spaces 2.0, the beta version. I've been invited to it and been playing around with it and stuff like that. My understanding also is that Dropbox, after they acquired HelloSign has seen like really, really good growth. We're not going to get too much into the nitty gritty of that in this video, but I just wanted to explain kind of the two big main things that are going on with Dropbox right now. Dropbox itself hasn't been too hard hit by the tech sell-off, but we've seen in general a lot of stocks kind of down 20-30% in the last couple of weeks. Check it out here at the price charts. This is the 6-month chart. Typically, I like to look at stocks for the long term. So I'm looking at 6 months, 1 year, 5 years, whatever. This is 6 months. Down there where you see kind of September, October, November is where I was kind of like, should I get in? And then I finally got in. And then it started to go up above 20 bucks, which made me feel cool because it made me think I could time the market, which is actually not really a thing. But been kind of 23, 25 bucks and not too affected, not too dramatic. And actually, after the last earnings report, a lot of people were like, dude, I'm done with Dropbox. But a lot of people were like, no, let's read the fine print and look closer at it. And then the management was like, dude, why isn't anybody buying our stock? Our stock is so dope, so much potential, and nobody cares. Why isn't Wallstreet picking this up? So they went ahead and dropped a bond offering too. So I'll go into that after we look first at the quarterly and yearly earnings. Check it out here on the headlines. Dropbox announced fourth quarter and fiscal 2020 results. Here are the big kind of bullet points. Fourth quarter revenue of $500 million, up 13% year over year. Net cash provided by operating activities of $170 million and free cash flow of $160 million surpasses the $2 billion in total annual recurring revenue. That's been a goal of Dropbox's for a long time, and they're pushing forward to try and get to $4 or $5 billion in the coming years as well. Fiscal 2020 revenue of $1.9 billion, up 15% year over year, and net cash provided by operating activities of $570 million, and free cash flow of almost $500 million. Then they go on to say down below, GAAP net loss was $256 million, as compared to only $50 million in the prior year, due to non-recurring impairment charges in the fourth quarter. So they're like, dude, we're breaking our own records for revenues. ARPUs are going up. Annual recurring revenues are going up. Users is going up. And then they're like, oh, yeah, but when you factor in everything, actually, we lost like 5 times more than we did last year. It's like, what's the deal, Dropbox? So a little while ago, after the pandemic started, Dropbox was basically like, okay, we don't need offices anymore. It's kind of stupid to have offices when all of our people can literally work at home. So what they ended up doing was just said, hey guys, just start working from home now. We're going to like cancel the contracts on our offices. We're going to like severely downgrade all of the physical holdings that we have. So what ended up happening is that they had to write off about $400 million because of all of those changes and breaking leases and stuff like that. And so when you look at the HyperCharts, by the way, if you find these HyperCharts helpful for understanding the numbers, for me, it's easier to look at colored bars than it is like entire spreadsheets full of numbers. But it's like, first quarter of 2018, super big net income loss. And then after that, it's like pretty stable, and then we're like, oh, the pandemic's here. All of a sudden, everybody needs to work at home. Good net income numbers. And then all of a sudden, boom, back down. But to get the whole story, we go over to the operating expenses. And you see this new purple one in the last quarter. That's the impairment related to real estate assets, $400 million. So up until now, that like didn't exist, All of a sudden, this huge thing comes in and it's like, whoa, what's going on? And we've been talking about a lot of stocks like Palantir and companies like that who've recently IPO'd lately. And what happens is with new companies who've IPO'd recently is that they end up giving all of their employees who've been working for them for like 10, 15, 20 years a bunch of stock options. And so in the same way, all of a sudden you see, boom, all these like stock related expenses popping in. And so Dropbox didn't recently IPO, but Dropbox is basically like, we're going to change the entire way we do business now. Boom. And we're going to incur a big loss right now for that. But going forward, things are going to be cheaper. We're not going to have to be paying these huge leases and all this rent and all this equipment and stuff like that. And so their thinking in doing this is going forward, hopefully expenses will be decreased and their profitability will be even greater going forward. All the while, Happier employees are more productive, and if they don't have to deal with like a 2-hour commute, that's pretty dope. And then jumping back up to the revenue and operating income, we can see healthy growth in the revenues and also gross profit. It's basically just like a straight line going up all the way. And that's why people love Dropbox. You know, revenues up an extra like 20 million per quarter, you know, and with that, the gross profit goes up. And so going on down to check out the assets, we see like a slight decline. Looks like it's about 300 million. But at the same time, I think their liabilities and expenses going forward should be cut as well. So when you're looking at GAAP versus non-GAAP numbers, they basically have flexibility to ignore these numbers, this $400 million expense that popped out of nowhere. So when you're looking at GAAP numbers, it looks really bad. It's like, why is Dropbox like falling apart? But actually, when you look at non-GAAP, it's like, oh, okay, it's not that big of a deal. So if you trust Dropbox, if you trust their leadership and their plan moving forward, downsizing the corporate office and stuff like that, then Dropbox is still a really good deal. And they're still making good cash flows. They're still growing, but Wallstreet hasn't really caught on to that yet. And I think that's why the people who look into Dropbox and really dig the numbers are like, dude, I'm so all in on Dropbox. But the crazy thing that's happened so far in the last year or so, or in the history of Dropbox ever actually, is that it hasn't really caught the eye of the really big investment banks and, you know, the investing public in general. So it hasn't gone to 50 or 80 or $100. I think based on the numbers, it's fair. It would be fair if that happened, you know. In my most recent video, click up here if you want to check it out, I shared some advice for people who are tech heavy or people who are hurting particularly a lot during this downtrend. Dropbox is one of those stocks that's like relatively stable. It's probably not going to go down to $15 or $10. By the same token, it's not going to go up to $50 tomorrow like a lot of meme stocks will either. But Dropbox is one of those companies that I've been holding for a little while, and I'm willing to hold it long going forward because I'm expecting it, you know, to see good growth going into the coming years. So the next doozy of information, Dropbox Inc. announces upsize and pricing of 1.3 billion convertible senior notes offering. And so really simply put, the management believes their stock price should be worth more than $25 and is confused why people aren't buying the stock more. So they're using this convertible note to kind of change the situation. And so it's not something to be alarmed about. Sometimes you'll see companies who are like, we need a lot of money, so we're going to put out bonds, or we need a lot of money, so we're going to go raise more money. And you'll see dilution and you'll see different things like that. But actually, on the contrary, in this case, they're going to be buying stocks back. And so when companies are doing stock buybacks, typically you see a little bit of a gentle push on the stock price going upwards. And so this is a good thing to be excited about for stockholders. If you're thinking about Dropbox or thinking about grabbing a little bit during, you know, these downtimes or whatever, it's not a bad idea. You know, I like Dropbox and I'm in it for the long term. Our team really loves Dropbox as a service. Have enjoyed it for a long time. And as I mentioned earlier, I think HelloSign is going to start kicking in the coming years. And Dropbox Spaces, if that takes off, could actually, you know, be a little bit of a game changer and help to monetize a lot of those hundreds of millions of non-paying subscribers as well. Looking forward to hearing your thoughts about the stock. Are you frustrated by its lack of movement and momentum? Or are you just going to be grabbing more? What do you think? Looking forward to talking to you guys down in the comment section below. Thank you guys very much. Love you and have a great one.